Space. We're live on a Monday, 11:30 a.m., November 9th. We are post-election. We're done with this craziness, but are we done with this craziness? I don't know what's going on. All I know is I'm going to double check that my stream is actually working. That's a good thing to start with. Give me a second, guys. Can I get a thumbs up in the chat if everything's working? Give me a confirm, please. Give me a confirm. No one? All right. All right. Let's see what let me just press refresh and see if that helps. Give me a second. Okay, looks good, everybody. I believe. All right. So today's episode, as with all episodes, are sponsored by Change Angel Non-Custodial Swap Exchange for Social Good. Stop depositing on exchanges. I want an asset. I get an asset, not your keys, not your crypto. That's the name of the game. Who's in the stream? Dave's in the stream. Always a pleasure. Captain Weber, my man. Thumbs up. I got some thumbs up that the stream's okay. Thank you. Appreciate it. Kel's in the house. Always a pleasure. Appreciate it. Morgaine, always a pleasure. Cheers. Let's rock and roll. Today's episode is obviously going to talk about the craziness that's going on. Equities are on fire this morning. Bitcoin took a big fat dump in the rump, and what kind of phrase is that? It dumped. Let's just say that. Let's suffice it to say that it was pretty brutal. But let's take a look. Let's pop it over to the main screen, and this is what's most important: the data. Let's start off with Bitcoin because that shit is crazy. So at first we thought we were going to have the breakout. We thought we were going to have a really nice breakout, and it did rip to the upside outside of trend formation. But what do I always say? Bearish price action or downward price action can be bullish. And this is bullish. This is a case where that is the case. Look, you're well within trend formation. What the fuck is everyone complaining about? I'm just saying. Equities are ripping to the upside, and Bitcoin had some negative price action to the tune of $500 or $800. Look at that, an 800-point drop, and it's still bullish because it's well within symmetrical triangle trend formation. And this is a very large symmetrical triangle, obviously going all the way down to 13,500. But this is great. This is good to see. I love this. This is a buying opportunity. I mean, clearly, when would you consider trimming risk? If you bought down here at about 14,800, boom, you got a good deal. You got 14,009 and change. And if it started to break down, right around there, give or take, in the upper 14s, 14.7, maybe 14.6, you're starting to get scared. But you're well within trend formation. So unless you see a violation of the trend formation, you should expect the trend formation to continue. You should expect the trend to play out because that's what trends do. They play out. It's the bottom line. It's the name of the game. And that's what we're looking for, and that's why we look for these trends, because the trends give us not predictability, but a likelihood of potential price action. Trends have the tendency to play out unless there's a violation of the trend, in which case you know how something's playing. It's breaking down. That's what quick to sell, exit your position, you wait for a new trend setup that has a more that is increasingly likely to go in the price action that you want, the price action that you're expecting, more likely than less likely. And that's how we make good bets around these places. Check this out. So here, I want to do this. I want to show you guys how bullish equities are. And we had this bearish price action in the crypto space. So this thing ripped like 1,500 points to the upside. Ben Carson got sick. How do you like them apples? All right. So 1,500 point rip to the upside, still up 1,100 points. Bitcoin took a fat dump to the downside. It's already bounced 200 points. REN is well within trend formation too. It is to the downside of the 200 EMA on the daily, but my guess is to the upside of the 1 hour at least. Yep, look at that. It bounced right off the 1 hour, 200 EMA. Love these 200 EMAs. That's everything to me, guys. And That's good to see. Let's take a look at the 4 hour for the fun of it. So it's to the downside of the 200 EMA in the 4 hour. But look at that. We're well within symmetrical triangle trend formation. I've redrawn this chart obviously a couple times over the months. But this looks good. I don't see this as a descending triangle because there is clearly an upward slope to support. Let's go to the daily real quick. I want to look at the MACD. I mean, look at this, guys. Guys, this is not a descending triangle. I mean, this is that's bullish right there. Look at that. A higher low on the MACD, and we just hit a bullish MACD signal cross on the daily, which means we're looking. Look what happened. Look at the last time. Look at the last two times we had a bullish MACD signal cross. One was here, and we had the last two times. Check this out. We had a bullish MACD signal cross. We had and then this went bearish right here. It was 100 for Ren. It was a 140-point rip to the upside. And then you go over here, and there was a bullish MACD signal cross right here, and it petered out right about there. So the last two times we had a bullish MACD signal cross on the daily, the first one ripped 288% to the upside, and the second one ripped 142% to the upside. And I'm just saying, like, boom, right there. You see it? You see that line? Boom, and then boom, and we just hit it. So let's see what this does. I'm inclined to think we're at least going to hit trend formation upside, which, let's do it, which puts us, probably another 37, 36, 37% to the upside. I mean, dare I say we break out? That's cool too. But I love this chart. This chart looks great, especially this bounce right up down here. That looked really good. So I had Tesla up. Tesla did break out to the upside on the shorter time frames, but it was quickly rejected. Now, I love the Tesla chart because I can't wait to buy it. I want to own this company at a good price. And what is a good price for me? If you go to the weekly chart, a good price is down here on the 200 EMA, probably around $120, $130 a share. And it's up at $439 a share. So that's when I will buy. I will buy a lot when it's $130 a share. And if it's not, I'm not going to buy it because then it's not a good deal. I will buy Tesla when it's a good deal because it's a great company. I just need the right price. And if I don't get it for the right price, if I go into a store and I see a piece of furniture I want and I'm like, it's not a good deal, I'm not going to buy it. If I see something that I want and it's really, really expensive, I'm not going to buy it. But if I get a good deal on it, I'm going to freaking buy it. Because this is something awesome to own. Once in a century company. If I get a good deal, you goddamn right I'm going to buy it. And what's a good deal? Mean regression. We haven't had a mean regression. October 21st is the last time it was on the mean, the average, the 200 EMA on the weekly. And since then, we've been substantially deviated from the average. So this is only appropriate to have a mean regression at some point. It's got to happen. Stelios in the house, always a pleasure. If anyone has any questions or thoughts in the chat, speak up. Let me know what's on your mind because I have things that are on my mind. But the whole point of this is to also converse about what you guys are thinking. So curve has been ripping to the upside. It looks really good, actually. So we've had obviously ridiculous bearish price action for months on end. But between what's going on with Yearn right now and other strategic software implementations that encourage the locking of curve for VE curve, I think this was bottom. I hope it's bottom. We did have a big bullishness back here when we broke to the upside out of the descending channel. But look, we're above the orange line. This orange line was a break to the upside, the break to the upside of the descending channel. We're notably above that, and we're in a symmetrical triangle trend formation. And just had a fat bullish rip to the upside. But look at this. Look how interesting it works out. Bullish rip to the upside, but we hit trend formation resistance. So if we zoom in a bit, you can see that this needs to be moved down a little bit. So let's see what happens. If it drops down and you see a bounce off the 200 EMA on the 30-minute, that's cool. You see a bounce off the 200 EMA in the 30 minute. That's pretty cool. Let's go over to the 4 hour, the higher time frames. That's the problem. It's so compressed because it's such a relatively new asset. You don't have the data points, so you can really only look at it meaningfully on like the 15 and the 30 minute. Not enough price action on the higher time frames. But I look forward to this. I think this is going to break out. I think Curve is one of the most important assets in the crypto space right now, which is something I've talked about quite often. And it's a fight to own as much of the proportional daily yield that the exchange generates. That's basically the best way or the simplest way to say it. I mean, but look at this. This looks really good. So you got one, two, three decent, well, two solid hits on resistance and a third, but look how it's basically riding the 200 EMA in the 30 minute. That's pretty cool. Um, that's quite bullish. If you see a break to the downside, oh, look at that. Maybe that's why. You have the 200 200 EMA on the 1 hour as well. I don't think we have one on the 4 hour. We need to see a rip to the 4 hour. So that's if we and look at the Stoke. So this thing is bottomed out. This thing is way oversold. And look at that. Check this out, guys. That looks good. So what I would look for, I mean, if you guys want to wait, an entry would be if you really are nervous about curve, you wait for, what I always say, a rip to the upside, a break of resistance, flip support, and then a confirmed higher high. But this is going to be substantially to the upside. That's big time to the upside. That's going to be 80%, an 80% rip to the upside. So I don't know. I don't know. I can't. I'm not good at giving recommendations. Too much risk taking. I'm not a fan of, but I like confirmations like that. That'd be a big move to the upside, but that'd also be a really meaningful confluence to suggest continued price appreciation. As long as you're below this 200 EMA, this could easily be significant resistance. But then you come down on the 1 hour and you got some meaningful support. Bear in mind we have 19 hours at least to at minimum or maximum to play out for the symmetrical triangle formation. So that's also something interesting to wait for. Now, if this breaks to the upside and does something like this, and then it turns that, and then you could buy here as well. And so the whole trick to a play like this is you buy here because broke to the upside, resistance, flip support, and a fresh higher high. And if this fresh higher high breaks down and the trend line doesn't hold the support, but it falls through the trend, you exit your position, and that's the bet. And that's how you make these types of gambles. So let's say you bought here and you exited, it's a clear breakdown. You bought it right. So you got 10% to the downside. And you lost 10%. And that's the gamble. But if you have a clear breakout, you never know what's going to play out. And you push to the 200 EMA to the upside and you swing 50%. So that's a 5 to 1. That's a pretty good play. And the odds are this is going to hit resistance. It always hits resistance. If you have a 200 EMA on the 4 hour and this thing breaks out of the symmetrical triangle and it runs up, it's going to smack into the 200 EMA and you'll see selling. And that's the way it works. And that would be your sell target if you want some scalps. And then you wait for the dip and you wait to see if it rips through again. So it'll go up and then dip and maybe it'll break through and then it'll flip resistance into support and then you get a back end entry. That's how you do some stuff like that. James is talking about Band. Band is cool. Link and Band are cool. So bear in mind what I think of Link and Band. Link is obviously much larger integration. But Band is meaningful because you can't just have a single software Oracle solution for the entire crypto space. That'd be awkward. So there's got to be competition. But these are parts of infrastructure. And you're talking about significant development required for infrastructure deployment and evolution and iteration. So stuff like that takes time. And right now there's a lot of volatility. So anything that takes time is going to experience substantial volatility. I mean, unless something is imminent, unless there's significant confluence that something's going to occur in the immediate future, long term, 6 months, a year out, you're going to have significant volatility. And that's basically the Ethereum space. So the Ethereum space, the macro narrative is infrastructure, is an alternative financial infrastructure basically for the planet, a public infrastructure versus the private infrastructure of sovereign nations with their fiat systems. It's not That's not really the public. I guess the public is a global infrastructure, the people, whereas a nation's infrastructure is kind of private to the nation, so to speak. So that's the way I think of Ethereum. And that's a very different narrative than Bitcoin. Very different narrative than Bitcoin. Bitcoin is obviously the risk-off asset for the world, the call option of the future, as Raul says, and the pristine collateral asset, a perfect treasury asset, and it's a thing to accumulate for value storage. And there's plenty of other assets. I've talked about Digibyte, and we can talk about BlockNet, StakeNet, even the Cred with their DEX. Bing, bada, boom. Richard says, I think your long-term thoughts on Curve are on point, and your plan is worth mirroring. Um, I like to be reserved with regard to folks doing what I do. There's no assurance that what I'm doing is the optimal solution, but there's some things that I can say that are good recommendations. Fuck fiat, accumulate assets other than fiat. There's storing fiat makes no sense. It's losing, according to the Chapwood Index, 10% per year. So why would you accumulate dollars? So which means why would you have a savings account denominated in dollars? Keep a certain amount of dollars in a bank account, and you need to pay bills because that's what every schmuck in this country accepts. All these stupid companies accept dollars because they don't know any better, or maybe they have dum-dums that are in their IT department that can't implement some simple software, and their accountants are like, I don't know how to handle cryptocurrencies, or I don't know how to handle anything other than dollar. I mean, this whole country, it's just so resistant to change. So, but that's besides the point. The point being, there's no point in accumulating dollars. It's a losing bet. It's a losing play. As Robert Kiyosaki says, savers are losers. And I agree with that. And it makes sense. So, anyway, that was obviously departed from Curve, but Curve is a recurring revenue stream. Your VE Curve, you're an owner of a part of the platform's trading fees, and that's an incredible notion. That's absolutely what I want. I want Curve to go 10x in volume, doing $1 billion to $5 billion a day, and I want to own 0.01 to 0.1% of the VE Curve. And if they were doing $1 billion a day and I own 0.1% of VE Curve, I'm making like $1,200 a day. If I own 0.01% and they're doing $10 billion a day, I'm making $1,200 a day. And obviously all the variations in between, but I want to own a meaningful percent of VE Curve. So in order to do that, unfortunately, we're getting diluted constantly because of the CRV emissions. So what you need to do is basically have a liquidity position. So you have to get, Curve emissions, because you don't want to work and take the money that you're earning from work and convert it to Curve just to buy to retain your proportional ownership of the E-curve. What you want to do is accumulate value and apply it to a liquidity position, provide liquidity, so you're going to have all your money that you work for, and you're going to be getting return on that. And that's accumulating. Now you're accumulating. You're not consuming. You're not spending your value. So I have my position. I put in a little bit there. So I have a leverage position in MakerDAO right now. It's a little something. And bear in mind, it's very secure. So for my position to be liquidated, I would need to see $5,000 Bitcoin. And that is highly unlikely, in my opinion. I tend to be very secure, so I could easily probably go over to DAI and do another 10,000, and that'll give me a 261% collateralization ratio. I'd have another 8,000. I'd be liquidated at 8,735. Now, I'm overly cautious. The odds of Bitcoin getting to $8,000 are probably slim to none. So I could probably crank out another 20,000. Yeah, but I don't want to take the risk. So this is where like DeFi Saver comes in, and this is kind of why I had this up. DeFi Saver is really cool. App.defisaver.com. So this automatically handles some of this, and you could automate. Uh, Look, I could keep my ratio at 300, which is a secure thing I like. Um, and this boost, and it'll automatically boost as much as possible. So for instance, to get me to 300, I probably have another 5,338, 7,500, 316. So this DeFi saver is really cool. 10,000. So I could boost about 10,000, which is 2/3 of a Bitcoin. So I could have I have a leveraged 5.82 Bitcoin instead of 5.15, because what it'll do is it'll mint the 10,000 extra DAI automatically and buy WBTC with it and add it as collateral to the vault, to the MakerDAO vault, which is pretty cool. But then, I for my choice is not the leveraged Bitcoin position, because I think I have enough of a Bitcoin position. So I took my leveraged DAI here, with my leveraged DAI about 20,000, and I moved it into Curve, because Curve I want to maintain my um, proportional ownership of VCRV as much as possible. So I'm under where I want to be, because this thing just keeps going up way too fast. I would love to be at 0.1% of VE Curve ownership, which would mean I need another 7,000 locked CRV. And I don't want to spend, so I'm probably going to go for like 0.01% to 0.1% as my target. If I can get 0.05% of V curve ownership, that's pretty cool. And that's my goal. That's my goal. So anyway, that was a long-winded answer to you, Richard. What do you need to see a risk on alt season? Risk on alt season is where everything's just ripping. 20%, 20%, 20%. And you go to CoinGecko and you go to the 24-hour chart. If you want to see what alt season was like, you go to Wayback Machine, thewaybackmachine.com, and you look at CoinGecko between May, June, July, and August of this year, and sort by 24 hours, and that was alt season. 20%, 20%, 20%, 20%. And if you look at the chart, look at this. I mean, this is really nice gains. For the 7-day gains are nice. So Aave obviously bounced back, but this was over $1 billion. So this is still 50% down from all-time high. So even the 7 days is a little misleading. What you really probably want is like the monthly, I guess. But these are some nice rips to the upside. But look, it's not long enough. The 24 hours, you got some negatives. So this is not where you go risk on. There's risk here. There's risk. So I'd be very careful. Right now, I'm still risk off. I'm not touching anything. Oh, look at this. There's like 5 assets that are up, and it's good to see stuff holding on to value, but this is not where I would take risk, guys. Band's market cap is too low compared to Chainlink. Yeah, man, Band is in a whole nother category compared to Chainlink. But Band is cool. I have a nice position in Band because it produces inflationary yield, because it's a Cosmos hub chain. That's it. It'll take time. But, Band and Chainlink, I still think are part of the larger macro narrative for infrastructure. And that's years out. To really see the fruits, the potential for Band and Chainlink, you're talking years out, guys. You'll want to see like really Cosmos Hub go to the next level, and China's blockchain narrative, and global financial, and the CBDCs come online, and Polkadot to really take fire with the substrate chains. Bam. Yeah, Aave ripped, Gabriel. Damn right they did. It was 70 something percent for the 7 days. Woo! But a band, well, band is it doesn't matter whether it's Cosmos or not. Band works for DOT. Band works for Ethereum. So band, it's the same thing as Chainlink. It's you could use it on any platform. That's just the way it is. Hey, Charlie's in the house. Always a pleasure, my man. What's up? Ergin? Ergin says it's pumping, man. Any thoughts? What's pumping? Tell me, what is this pumping? Let's look at Bitcoin. Tell me if Bitcoin's pumping. No, 15,079, but I hit a solid bounce, guys. Ooh, that's a solid bounce. Look at that. Look at that beautiful bounce off bottom. 14,800. 200, 300 points to the upside. It's good to see. It's pretty cool. I think it looks bullish. This is a wonderful chart. People, I know newbies or folks that don't look at charts see an 800-point drop to the downside as bearish, but this is well within trend formation. Bitcoin looks great. This thing could easily rip to the upsides and just break right out. Ren looks really good, well within trend formation. We talked about Ren. We talked about Tesla. This thing got rejected hard, and I can't wait to buy this on the mean regression down at the 130s. Curve, love that curve. We talked about it a bunch. It's the name of the game. Rick G says, with all the talk of democratizing finance and allowing crypto to impact the little guy, plans like your curve play need to be shared. Yeah. Oh my dude, curve is not a bot. Who cares about the value of CRV? Frankly, if CRV kept going down, that's cool. All anyone really should care about is proportional ownership of the platform's trading fees. I don't care about the value of Curve. What I want is an ability to vote in the DAO, to participate in the DAO for a reasonable price, and I want to own that. You see that? Do you see is this highlighted? Let me check my stream and make sure this is highlighted right here. Let me see if I can zoom in on this bad boy. You see this right here? This is what I want to own. Daily earnings. I want to own a piece of that. That's what I care about. Folks looking at this price and I want this asset to go up 20. No, I don't care if Curve goes up or down. I want a portion of the platform's trading fees. So right now I'm getting like 12.44 a day. So if Curve of all of a sudden this daily volume was 720 million, I'm making 120 bucks a day. If it was 7 billion, which is still a relatively small platform in the global financial system, making $1,200 a day. So I want to own and retain and fight to retain as much of that proportional ownership of VE Curve as I can. And I do that by providing a liquidity position, which I think I'm actually going to take on a little more risk and move some value from Celsius over to MakerDAO for a leveraged DAI position and move it into Curve and get some more of this yield, throwing around 30%. 50% in the USDK pool, 57% in the USDN. I'm probably not going to go there because I like avoiding 3-pool. 3-pool has Tether. I don't trust Tether one bit. So which is kind of why I opt for the DAI USDC pool. So if shit happens with Tether, there's going to be some problems with these pools. I don't trust Tether. I don't trust it. There's too much FUD around it, and there's a pool right here that does not have Tether involved. And that's the name of the game. Yeah, Rick, I like it. I like it. I want yield. I want 6% of my Bitcoin from BlockFi and Celsius. I want daily recurring revenue stream from Curve. I want, what else produces yield? I got yield coming from somewhere else. I just get up too early in the morning to remember where. Oh, my goodness. How do I forget about my most favorite yield in the world? Woo! This is the best yield there is. It's the dark nodes. Oh, goodness. This is just a joy to watch people that want to take their Bitcoin and participate in the Ethereum platform. Gotta be the Cosmos platform. one of the Cosmos hub chains, and it's gonna be a Kala, Polkadot, or whatever other chain, substrate chain that offers stablecoin functionality, and we're gonna get a percentage of the mint and burn fees, and that's an incredible source of yield. I love it. I love it. Rocket Pool or Lido Finance. I'm not. I have stashed away a 32. 32. That's all I have. Albeit Ethereum is like cash, and I think that's the only thing I'm gonna spend some of my dollars. I'm gonna buy some Ethereum, but literally the mental thought is cash. Like I literally need Ethereum for gas and cash, and that's really why Ethereum is so freaking bullish. You need it to participate in the platform, and that's kind of the future of Ethereum. I'm going to buy Ethereum because I need it to pay for gas to do all of this stuff, all the Curve, make it DAO, DeFi Saver, interact with my dark nodes. I need and NFTs with Gods Unchained. I need Ethereum for cash. That's crazy. So that's the narrative for Ethereum. I'm literally living the life where Ethereum is necessary for cash. It's great. That's really cool. So, if anything, I'd lean towards Rocket Pool, but I don't know if I want to stake. I'll stake in 2 years when the platform is actually live. When F2 is actually live, I have no interest in staking right now. But what I want to do is I have set it aside just in case. So that's the quantity. That's the target that I had, the numerical number. But otherwise, right now, guys, as of 12:02 on a Monday, November 9th, Bitcoin. The macro narrative is Bitcoin. If you need to be reassured of that, you watch Raoul Pal, you watch Real Vision, you watch Lynn Alden, you watch George Gammon. It's Bitcoin. Don't take too much risk with the altcoins. I know you guys you like the cheaper numbers, and I know Bitcoin seems intimidating at 15,000, but that's the narrative, man. The big corporations are going to take their money and allocate it towards Bitcoin because of inflation. You know, inflation, and I agree because there's no way they're going to be able to overcome the deflationary pressure of trillions and trillions of dollars of defaults, and until they really get the CBDCs rolled out. But as Michael Saylor talks about, is the inflation of equities. Where are corporations going to put their dollars to avoid the debasement of the dollars? If you look at equities, that shit was up $1,000 today. So this is inflating. So if a company wants to buy or take money and put it somewhere other than dollars to avoid whatever debasement percentage they're calculating, they literally just missed out today because this inflated 1,100 points in the blink of an eye. And then, it's complicated. I can't pretend to understand everything. What I try is my best, and I like talking to you guys about it. So thank you for listening. Morgan says, how many BTC you currently have in Curve? I don't have any BTC in Curve. So Bitcoin is offered 7.69%, 9.3. I wouldn't put it in the HBTC pool because your asset is only as safe as the lowest common denominator. So WBTC is cool. That I don't think is going to have any systemic issues. And RenBTC, I own the dark node, so I have quite the faith and comfort being involved participating in a pool that involves RenBTC, and SBTC is Synthetics, Synthetics also produces yield. Synthetics is one of the most bullish assets in the crypto space. The narrative is absolutely incredible. So I'm comfortable with the 9.34%. So that's where you could get off of Bitcoin. But what I did was I took my Bitcoin and I went over to make a DAO to get DAI, and I took a leveraged DAI position and placed that in the compound pool. So that is offering 34%, and that's the way that sequence of events or yield strategy works. Nathan's in the house. Always a pleasure. Michelangelos. All right, we're going to wrap things up 12:05 on a Monday, November 9th. We're post-election. This could be an interesting week. Let's see what goes on. Let's see how the equities market does tomorrow. Let's keep an eye on Bitcoin. 15,099 already. That is a solid bounce. Let's take a look real quick before I close the stream. I mean, come on. Let's take a look. Incredible. Where's my price tool? Price. I mean, that's a solid rip off the bottom to 2.2%. How many? 335 points. $335 off the bottom. So that's a solid bounce. Well within trend formation. So I'll keep an eye on it tomorrow. I'll pop the charts in the stream. Smack those thumbs up buttons. Tell everyone to subscribe. And you all have a wonderful day. I'll see you tomorrow. Peace.